Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's packed program, I'm going to be looking at two particular levels, one which is bullish and one which is bearish, as per the title of the video, and why these are the two critical levels for this week. I'll also have a look at the wider picture to know exactly where we're going over this 4-year cycle, as well as to look at the 60-day cycle to determine the future swing trades for the Bitcoin miners and why we have to mind the gap at 39,000. So if that sounds interesting, then without further ado, get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. And as per usual, the polite reminder, please remember everything in my videos is just for educational purposes. So please always do your wider research before you make any investment decisions or any swing trade decisions. And we'll start off here with the default chart. All I would say is let's have a look at the evidence in the chart. So this is the monthly chart to give you that big overall picture. So in this first cycle here, the 4-year cycle up to the yellow line here, and then the second cycle up to this yellow line, and the third cycle up to this yellow line, and we're now in the fourth 4-year cycle. And the red lines are obviously the halvings, and this is the next halving coming up in April. So the first cycle before the halving, you can see quite clearly that we have this orange line which establishes a very strong support level which the price never comes back down to. So if you look at the first cycle, this support was never broken. Second cycle, this support has never been broken. This support has never been broken. With a high probability is probably not going to be broken. And currently, that level we're talking about is about 29,000. So anybody thinking that we're going to come back down below 30,000 may want to look at this particular chart. And as I mentioned in last Friday's video, we've really got two options here of the end of the current 4-year cycle. So the 4-year cycle always goes from bottom to bottom. And this is where we expect the bottom to be, anywhere around here. And as I say in most of my videos, we're on this journey to the end of this 4-year cycle, which is more than likely going to be by the end of 2025. But if it's a left translated cycle, we will be going towards the end of 2024. So from where we are, we have a 2-year, possibly 1-year journey. And always remember, the market's aim is to shake you in and out of the market at your expense. And so far, if you've been following my channel, you'll know that we have been carrying our trades from the bottom of this market at around about the 17 and the 15,000, and at this point we're well in profits here, and we've now got 2 more years, possibly 1 year to go. And I have to keep reminding myself not to let go of these profits prematurely along this journey, because this is what the market is trying to do with the oscillations along the way. So let's see how things go, but certainly it's an endurance test of real patience and determination to get to the end of this bull market without causing undue harm to our positions here. Okay, so I'm going to have a look at the wider markets before giving you the narrative that I see developing in the current Bitcoin price. Okay, so if we have a look at the SPX, we can see that the market had the 60-day cycle low here, and currently we've topped out on day 48 on this high. So what this tells me is that it has a high probability to come into the 60-day cycle low before making a higher low from these positions here and then getting into this next 60-day cycle. And with the prospect of interest rates coming down in 2024, you can see further upside to this market. And you can see on the weekly chart, we have 7 strong green candles. So we know we're coming to the top of this market here. So it would make sense to have a little bit of a pullback, at least to these levels down here, which would be around about 45.90. And on the monthly chart, we can see we're coming up to a bit of a double top over here at around 48. So it may well be we go one more leg up, 48, before coming down, or we come down and come back and retest this level at this point to break up to the upside. So let's see how that develops. Very interesting on the SPX. And with the dollar, as I mentioned last week, when we lost this candle here, now we're more than likely going to come back and retest this support level down here at about 101, and it's exactly come down to 101. We may well be bouncing a little bit off this support level, so we may well be coming back down to these levels here at around 99, which I mentioned last week as well. So this is the next stop for the dollar, which allows the wider markets to go higher. But there is furthermore downside to go over the next 2 years. So the dollar is giving us a very good signal that for the next year, maybe 2 years, the wider markets are going to perform very well. And if we have a look at the Dow Jones index one more time, just like the SPX, we've had 7 green strong candles. The trend is amazing here, and I would expect the trend to continue. So it may well be we have one more leg up to this blue line here before we have a little bit of a pullback and then a continuation to the upside. So once again, these charts are looking quite bullish. If we go into the monthly chart for the Dow Jones, you can see where this blue line is coming. You can see that this blue line is coming all the way back to 1929. Yes, you heard that properly, 1929. We've been in this range ever since then. So you would expect at the blue line to have some sort of a pullback, but once we break above it, having now tested it once, twice, 3 times, we're now coming up to it the 4th time. If we can break above that, then we can really motor on for the next 2 years. So here it is here. We broke out back in 2021. But this is obviously now a fake out because we were rejected at this point, came back, bottomed out, and now we're making another attempt one more time. Let's see where that goes, but the short term seems to be quite bullish. Okay, so where are we with Bitcoin? So just like the Dow Jones and the S&P, what we've got is 8 green solid candles here. But yesterday, we finished with a red candle, which is telling us that there is a loss of momentum here. And we may well be in a period of consolidation going forward in the next week or two. And this is confirmed by the fact that we've now turned down in the RSI, and the stochastic RSI seems to be turning back down as well here. And we're above the 80 on the Bressart momentum indicator here as well. So seems to be we're topping out a little bit here, and that seems to play into the narrative that I gave you on Friday, and I'll go through that in a few minutes about the 2 critical levels. So you can see that on the weekly chart we have the first signs of the loss of momentum for Bitcoin here. And I'm going to just show you something very interesting. On the CME futures, we have a gap forming here. So we made a high on this candle on the 27th of November at 39,640. And then the next day, we gapped up to this Marubozu candle here. And since then, we're now been coming down. So what we've got is a gap forming in this region down to the 39,640. I would expect with a high probability for this gap to be actually filled. So we should come back down at least to the 39,640 and probably a little bit lower than that as per my analysis I'm going to do for you with those 2 critical levels. Okay, so as per the title of this video, which are the 2 critical levels we have to watch out for this week? We've seen that the CME Gap is down at 39,640, and in the last video I showed you with the Fibonacci retracement, if you go from the top here at 45 down to this level here, the recent low here, then what we've done is we've come up to the 61.8 at 43 here, and I said that with a higher probability it's going to get rejected here, and if it does then it's giving us an ABC correction, and it seems to be playing out as per that narrative. So we've come down, and I said in the last video very high probability to go and test this level here at 40,150. So this is our next level here really, and what this is basically an M pattern that's developing. And if we break the M pattern, usually you know that the next level will be then supported, and that level is at exactly 38,000 here. So this is what I'm waiting for. It's the same narrative as the last Friday, but what we have on the 4-hour chart developing are the 2 levels which we really need to look at for the shorter term. I've already marked out the higher level here, so if the market does go back up to this level here, which is exactly at around about 43,000, so if we break this cluster of candles here at about 43 and a half, let's say there, then this would be bullish and would be a sign to get on board for a ride to the upside here. And yes, we'll find some resistance here. So that for me would be a sign of the break to the upside and a tentative sign that the 60-day cycle has now started with a low being confirmed around here. But that is a tentative sign. The real sign is going to be to break these levels here. But in the short term, this is going to be bullish at around about 43,500. So that's the first level. And the second level, the bearish level, is going to be at the bottoms of these candles here. So if you take this level here at 40,150, if we break this level here, then with a high probability, it's going to make its way to the next support level at the tops of these candles here. So this is a very strong support level that we will need to navigate back down to before I expect to move to the upside. And the reason why I don't expect this to go further down is because when you look at the volume here, this recent pullback that we're having doesn't seem to have much of a volume related pullback. So what I would expect is that this is more of a tentative pullback, a shallow pullback, rather than a deep pullback into here. If there was to be a deeper pullback over here, I would have expected these types of candles, these red big candles here, but the volume here is very small. So that just gives you a signal that this pullback is not going to be as deep as the previous ones. So building that narrative on the daily chart with the simple moving averages, we can see a picture developing here, and that is that we've been riding this particular move from the bottom here around about the middle of October. This was the bottom of our previous 60-day cycle, and we've been riding this along the way here. And we can see that the 20 simple moving average, the yellow line, and the white 50 simple moving average, which is coming into view now, that we found support all the way on the 21 several times, and even over here. But look what's happened at this point. We've now broken down below that. So this is the first red candle below the 21, and unless we can recapture that, it looks with a higher probability to be going to the downside. And the reason why this has a higher probability of moving to the downside rather than the supports that we had along the way here is because at these points we had a support level at this point. So there was a good probability that we would bounce up from there. And this level here was at the tops of these wicks here. So once again, it had a good probability to bounce back up again. So this breakdown here doesn't seem to have much of a support along the left here. And the interesting thing is that if you look at the white line, the 50 simple moving average, the confluence of that is right on the 38,000. So this is now providing a very good confluence of support for the price to fall back down to. And if you draw a trend line between these two bottom points here, once again, the confluence is to come back down to the 38,000. So you have 3 points of confluence here: the trend line, the 50 simple moving average, and the support line at these candles here. So my narrative is that with a higher probability, we're going to come back down to the 38 level. And with the volume, as I've shown you, it doesn't look to me as though we're going to go much further. So this now already signals for me that the 60-day cycle will probably be at the 38,000, and I can pick that up for the swing trades with the Bitcoin miners whenever that's going to be. It could be this week, it could be next week. And we can also see that there is a divergence. While we made a higher high over here, we made a lower high down here. So it's very flat on the RSI, slightly leaning to the downside, but quite high on the gradient for the price level. So this provides further confluence that we're on the downslide at the moment. And on the momentum indicator, the stochastic RSI, we've already gone below the 30, so we could spend a little bit more time down here yet while this resets at a lower price. So these are the two critical levels now, 43,500 and 40,150. And as I've said, the higher probability is that we're going to break down below that, down to the 38 level. So if I was waiting to get in as an entry to Bitcoin, I would be dollar cost averaging around these levels at 38,000. And if the price was to actually bounce from here and then break above this level at 43,500, I'd be looking for a long position to catch the big move to the upside that would be expected at this point. Only time will tell if this plays out. Okay, so if we put our 60-day cycle goggles on now, what can we see? So far on the 60-day cycle, we've topped out here at exactly day 57. So we've had a 57-day high. As I've been mentioning for the recent videos, as we were coming up here, that we were due a 60-day cycle low coming into the 60-day cycle endpoint here, which is what's happened at the moment. So what we're really waiting for is for this to play out. And as I've shown you, 38 seems to be a good point for it to bounce from. So to me, it looks like the signal for the new 60-day cycle is going to be around about in this region. So we have to wait and be patient. And once that's confirmed, that will trigger off some of the swing trades that we do with the Bitcoin miners. So in terms of a right or left translated cycle, it's quite clear that this was the midpoint. And from this midpoint high over here, we've made a further higher high here. So it's a very clear, very well-defined 60-day cycle, which is right translated. And having had two failed cycles over here, I would expect another right translated cycle on this side as well, especially in a bull market. And with the advent of the ETFs in the background, low supply, high demand, this would be an expectation of a right translated cycle one more time. Okay, so on the strategy side, how do we play this? As you know, I've been following these 60-day cycles from all the way back from the bottom here at 15,400. So we've been riding the Bitcoin miners all the way along this journey here. So this is where we are. We have high levels of profits which we're carrying at this point. And the last thing you want to do is to give up those profits by making silly mistakes. And for that reason, I remain fully invested at this point. And from what I see so far and what I've explained in the last many videos, I would not be engaging in this kind of a pullback under current conditions with the ETF in the background and the situation with the supply and demand of Bitcoin. The long-term holders of Bitcoin are getting more and more. So therefore, the supply is falling, and I would expect with a high probability for us to go back up again, either from where we are now, if it doesn't come back to the 38, or the 38 itself. So for me, the overall picture is not to be distracted by any narrative out there that could be bearish. So for me, it's a continuation of the next 2 years, and with our second target at the pi cycle, which is now currently at 56,000, I would have to review my position there to see if there is a good opportunity to take a profit here. I would expect a deeper correction at this point, but until we get there, it's better to just ride this all the way up wherever this is going to be. So this is how I've used the 60-day cycles to get into swing trades, which is our short-term portfolio, which feeds into the long-term portfolio, which we started back at the end of 2022, and we've been carrying that all the way through 2023. So using the 60-day cycles, the following are the results that we've had so far up to round 4. So back in March, we had these results here, which we then followed up by round 2 in July this year, of these increases. Round 3 proved to be disappointing, and we actually got stopped out in all of our trades. And that was due to the 2 60-day cycle failures that we had at the time. And if we scroll up here, we can see that in round 4, which I showed you on Friday, we've had these results so far. We've closed all our positions now, and we're now waiting for the beginning of the next swing trades, which will be at the end of the current 60-day cycle. So once we know the end of the 60-day cycle has come and a new cycle has started, that could be this week, that could be next week, that will be the beginning of the new set of swing trades, which will be the round 5 trades. And if you're wondering about the Bitcoin miners, these are the results that the Bitcoin miners achieved from the March 2020 COVID situation. And if you're interested in knowing about the Bitcoin miners and the upcoming swing trades, as well as looking at the longer term portfolio, and if you're interested in joining us at the Bitcoin miners, then all you have to do is click the join button here. And for the price of a coffee per week, you'd have access to all the previous videos for our long-term portfolio as well as all the swing trades. I'm not sure how many spaces there are left. There were 7 on Friday. If the spaces have all gone, then please keep trying, because if somebody cancels, then you can take their place. If you do join, then on the membership tab here on my channel, you'll see that there's a new members introduction video here, and that gives you an insight into exactly what we do and get you on board to be on the same page as everybody else. Okay, so we'll leave it there. I hope you found value in the video. If you did, then please do remember to like and to subscribe and to turn on the notification bell. If you've got any comments, questions or suggestions, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.